To be wiped out in the market is not a final defeat. It is a moment of truth. Most traders never prepare for this moment. They prepare for winning. They prepare for opportunity. They prepare for success. They do not prepare for collapse. And when collapse arrives, it doesn't just take money. It takes identity. Stay with me. Because this is not a story about failure. It's a study of what happens after everything you believed about yourself has been disproven by the market. Jesse Livermore understood this in a way few traders ever do. Not once, not twice, but repeatedly. And that is what makes his story uncomfortable. Because talent did not protect him. Intelligence did not protect him. Experience did not protect him. Only change did. And change came slowly, through damage. Most traders think the market defeats them. Livermore learned something harsher. The market does not defeat traders. It exposes them. What you bring into the market is what the market magnifies. And when you bring weakness, urgency, or ego, the market multiplies it ruthlessly. Stay with me. Because the first collapse is where most traders disappear forever. And Livermore didn't. Livermore arrived in New York young, sharp, and already dangerous. He wasn't guessing anymore. He had proof. He had beaten the bucket shops. He had read price correctly. He had made money when others couldn't. That early success did something subtle. It didn't make him reckless. It made him confident. And confidence, when it arrives too early, is the most expensive emotion in trading. Because confidence convinces you that risk is smaller than it is. Livermore began to believe he understood the market's language, not just occasionally, but consistently. That belief is lethal. Once you believe you've solved the market, you stop asking permission. You start taking initiative. Position size grows quietly. Patience shortens. Waiting feels unnecessary. Nothing looks wrong on the surface. Trades still work. Losses still recover. The account still grows. This is how the trap forms. The market allows you to believe you're in control, until it doesn't. Livermore didn't fail because he couldn't read price. He failed because he stopped respecting uncertainty. He trusted instinct where discipline was required. He entered earlier, held longer, ignored the discomfort that used to stop him. And then the market shifted, not dramatically, not with chaos. It simply stopped rewarding him. Small losses appeared, then larger ones. And instead of stepping back, Livermore pressed forward. Because confidence does not retreat easily. It defends itself. He believed the market would return to what he understood. It didn't. And when the losses accelerated, they did so without emotion. The market does not care how correct you were yesterday. It only cares whether you are aligned today. Livermore was not. The account collapsed, quickly, completely. Here is the moment that matters. When Livermore lost everything the first time, he did not just lose capital. He lost certainty, the belief that his understanding was permanent. And that loss destabilizes a trader more than money ever can. Because now every future trade is taken by someone who remembers being wrong on a scale that hurt. Most traders never recover from this moment. They either disappear entirely or they trade emotionally, trying to prove the loss was an accident, trying to win back not just money, but identity. Livermore did something colder. He disappeared internally. He stopped trading for validation, stopped defending his intelligence, stopped trying to prove anything to the market. This withdrawal was not weakness. It was containment. He understood something critical even this early. If he continued trading as the same person who just failed, the failure would repeat. So he did the only thing that works. He removed ego from the equation. He reduced size. He slowed down. He listened again, not to opinions, not to instinct, to price, without interpretation. This first ruin taught him a lesson that would repeat throughout his life. Early success is more dangerous than early failure, because failure humbles you. Success convinces you that humility is no longer necessary. Stay with me. Because the next collapse happened when Livermore was no longer young, no longer underestimated, and no longer allowed the excuse of inexperience. And that collapse exposed the most dangerous phase in trading, knowing exactly what to do and choosing not to do it. By 1908, Livermore was no longer young. He was no longer underestimated. He was no longer learning in public. He was famous, respected, feared, quoted. Other traders watched his positions. Newspapers followed his moves. Capital came easily. And this is where the danger changed shape. Because ignorance was gone, only choice remained. Livermore did not lose his edge in 1908. That's the uncomfortable truth. He still understood price. He still read the market correctly. He still saw opportunity before others. What he lost was obedience. Success had trained him to expect recovery. Losses no longer felt final. Drawdowns no longer felt threatening. Rules felt flexible because they had been survived before. This is the most dangerous phase in trading, when you know exactly what to do and choose not to do it. Position size increased. Risk limits softened. Losses were tolerated longer because they always came back. And for a while they did. That's what made it fatal. The market rewarded his disobedience just long enough to reinforce it. Then conditions changed. Not suddenly, not violently, quietly. Volatility shifted. Trends lost follow-through. Positions that once worked stopped forgiving mistakes. Livermore noticed, but he didn't respond correctly, because confidence had replaced caution. Instead of stepping back, he pressed forward. Instead of reducing exposure, he relied on reputation. Instead of obeying rules, he trusted experience. And experience, when it turns into entitlement, destroys traders. Losses accumulated, then accelerated. And this time, there was no escape. Livermore went bankrupt. Publicly. The man others followed had lost everything. Again. Here is the critical moment. After 1908, Livermore stopped explaining losses. He stopped blaming timing. He stopped blaming conditions. He stopped blaming the market. He accepted something most traders never do: absolute responsibility, not emotionally, practically. Every loss was traced back to a decision he made after a rule had already been broken. Not the market, not randomness, behavior. This acceptance was brutal, but it was necessary, because without it, there is no rebuild. Most traders fail here. They want recovery without accountability. They want another chance without changing behavior. Livermore did not allow himself that illusion. From this point forward, his comebacks were no longer driven by brilliance. They were driven by restriction, less size, clearer limits, immediate exits. Not because he was afraid, but because he finally understood something. The market does not care how smart you are. It only cares whether you obey it. 1908 taught Livermore the most expensive lesson of his life. Talent does not protect you from yourself. Only structure does. Stay with me. Because the next phase is where most traders destroy their comeback, the urge to win it back. This is where most traders disappear forever, not at the loss, not at the bankruptcy, after, when the urge appears, the urge to win it back. Livermore knew this urge intimately. It followed every major collapse. Quiet at first, reasonable, almost responsible. I'll trade smaller. I'll be careful. I know what I did wrong. This is how the trap speaks. Because the urge to recover does not feel reckless. It feels logical. But it is not logic. It is pressure. Pressure to erase pain. Pressure to restore identity. Pressure to prove the loss was temporary. The market feeds on this pressure. Livermore learned the hard way that urgency is not motivation. It is distortion. When a trader feels behind, every setup looks better than it is. Every risk feels acceptable. Every rule feels negotiable. You are no longer trading opportunity. You are trading relief. Livermore fell into this more than once. After collapse, he wanted speed, not recklessness. Speed. He wanted to shorten the time between humiliation and recovery. The market punished this mercilessly. Losses came faster. Mistakes multiplied. Confidence eroded further. Here is the truth most traders refuse to accept. You cannot recover financially until you recover psychologically, and psychology heals slower than capital. The trader who rushes recovery trades with a hidden objective, not profit, resolution. Livermore eventually understood this, and when he did, his behavior changed dramatically. He stopped treating recovery as a mission. He treated it as rehabilitation. No deadlines, no targets, no urgency, just behavior. Correct behavior, repeated consistently without emotional pressure. This is where most traders break. They demand progress too soon. They measure recovery in dollars. They judge themselves by speed. Livermore learned to judge himself by obedience. Did he follow his rules? Did he respect size? Did he exit without negotiation? If the answer was yes, the day was successful, even if he lost money. This shift is everything, because it removes pressure from outcome and places it on behavior. And behavior is controllable. The urge to win it back never fully disappears. It waits. It appears after small losses, after missed moves, after boredom. Livermore learned not to fight this urge. He learned to disqualify trades when it appeared. If urgency was present, the trade was invalid, not delayed, invalid. This single insight saved every successful comeback he ever had. Stay with me, because the next phase is where Livermore rebuilt correctly. Starting from zero, without ego, and without urgency. When Livermore rebuilt correctly, it did not look like a comeback. It looked like retreat. He did something that felt humiliating. He started small, painfully small, not because he lacked capital, because he no longer trusted himself with size. This is where most traders fail. They think starting small is about money. It's not. It's about restoring trust between you and your own decision-making. After a collapse, your judgment is damaged, not because you're incapable, but because every decision is distorted by memory. Memory of loss, memory of embarrassment, memory of being wrong when you felt certain. Large size amplifies this distortion. Small size contains it. Livermore understood that discipline could not be rebuilt under pressure. So he removed pressure. Trades were small enough that losses did not provoke reaction. Wins were small enough that excitement did not appear. This created a neutral environment where behavior could be observed honestly, not corrected emotionally, observed. Rules became non-negotiable. Stops were honored immediately. No exceptions. No reinterpretation. No just this once. This was not fear. It was repair. Most traders try to feel confident before they act disciplined. Livermore reversed the order. Discipline came first. Confidence followed as a side effect. This is the only order that works. Starting small also revealed something important. Many trades he once took were never necessary. Without size to justify them, they lost appeal. This exposed how much of his past activity had been driven by involvement, not opportunity. Livermore learned to trade less, much less. And in trading less, his clarity returned. Days passed without trades, sometimes weeks. This did not bother him, because his goal was no longer profit. It was stability. Stability of behavior, stability of emotion, stability of judgment. Only from stability can opportunity be recognized accurately. Most traders never allow this phase to complete. They increase size too soon. They chase confidence. They rush recovery. Livermore waited, and that waiting is what separated his real comebacks from his collapses. Stay with me. Because the final lesson is not about rebuilding wealth, it's about why one final victory still wasn't enough to save him. In 1929, Jesse Livermore was right. More than right. He saw the collapse coming when others were still celebrating. He positioned early, he sized correctly, he stayed patient. And when the market finally broke, he made one of the greatest fortunes in trading history. This should have been the ending, the proof, the redemption, the victory that erased every past failure. But it wasn't. Because markets can restore money faster than they restore the mind. Livermore had rebuilt capital. He had not rebuilt peace. The scars from earlier collapses were still there, buried, unspoken, unresolved. This is the contradiction most traders never understand. Winning again does not automatically heal damage. In some cases, it makes it worse, because success returns you to the same arena that broke you, only now with higher stakes. Livermore's later years were not undone by ignorance. They were undone by accumulation, accumulated pressure, accumulated responsibility, accumulated isolation. The same intensity that made him great left him alone with his thoughts. He had mastered markets. He had not mastered the weight of carrying them. This matters, because many traders believe that if they can just recover financially, everything else will fall into place. Livermore proves otherwise. The mind does not reset just because the account does. Unresolved fear resurfaces. Old habits wait patiently, pressure returns quietly, and discipline, when treated only as a trading tool instead of a life structure, eventually fractures. Livermore's final collapse was not tactical. It was internal. Not one bad trade, not one mistake, but exhaustion. The exhaustion of fighting himself for decades without rest. This is not a moral story, and it is not a warning against ambition. It is a warning about imbalance. Trading at the highest level demands more than skill. It demands psychological maintenance. Livermore never learned how to step away internally, only externally, and eventually the weight won. This does not erase his legacy. It completes it. Because his life reveals something essential. The market will forgive mistakes. It will even forgive arrogance, but it will never protect you from yourself. If you are starting over or rebuilding or chasing redemption, this is the final lesson. Recovery is not just financial. If you rebuild capital without rebuilding stability, you will repeat history, even if you win again. Livermore's greatest victories came after collapse. His greatest loss came after victory. That's the paradox. And it is why trading is not a sprint, not a marathon, but a lifetime negotiation between ambition and restraint. If this changed how you see loss, recovery, and success itself, you understand why this story matters. This channel exists for traders who value survival over spectacle, judgment over speed, and discipline over ego. Subscribe, not for signals, not for shortcuts, but for trading psychology built for those who intend to last. That is the real comeback.